Good morning, good morning, good morning. Welcome back to the channel, guys. It's Saturday. I hope everyone is ready to have a nice, relaxing day today. We're going to start this off with Dixie because we are going to probably have a lot of headaches next week. So I just want to point out a few quick things. One, on a weekly time frame, we are getting to the top of our resistance. We're expecting a pullback from this area. Kind of started off already in the last week. We got a little bit of a pullback. Good thing is we did not close under our 103, 104 level. We are holding that sideways. That's great. Next week, I'm going to probably look for a little bit more pullback into that 104, low 104, high 103 level and hope for support there. And I'm going to show you on a daily. Maybe it's going to be better. We are still filling out the consolidation. So nothing is going out of our pre-planned idea. Waiting for the drawings to pop up. But we were looking at this triangle consolidation over here. And that triangle consolidation is slowly filling up. And then from there, we're looking for upside. So find some support here, and then we want to see some continuation to the upside. If we lose this 103.50, I want to say, that's going to be the first warning of downside. But until we fill out this triangle, I'm not really feeling any pressure of a change of direction. Sideways over here, find support, and then continue back up. That's fine. This measured move situation, you can just drag it a little bit to the side because it's not coming there yet, but in time, this is what we're looking for. So we could just leave that there. And yeah, that's basically it. Next week, we should be looking for some consolidation. It might come a little bit lower because RSI is showing it's looking for a little bit lower on daily. If that occurs, that's totally okay. It's going to give us some nice upside on crypto. And as Friday was closing, crypto and Dixie was going down together. So there is that weird inverse correlation disappearing at like the most important time. So just keep aware of that. Here on a 4-hour chart, you can see we're finding like a little inverse head and shoulders setup kind of situation. I don't know if it's going to play out or not, but as of right now, I'm waiting for this consolidation at 104 and then up. And this will probably give you more downside on crypto, but until that downside comes, if this continues down and touches into the 200, like 103.80, 103.75, whatever, you will get a nice little pop up and it can follow this channel all the way up. What is it called? For dollar, the descending channel. If you can see this little formation here. And then I know it got a breakout, but it can probably come back, test to the bottom of the channel, which is around here, and then break out again. It still would be okay. So just keep that in mind for Dixie. Dixie is like pretty important for you guys to follow. Um, Aside from Dixie, what other thing I want to point out today is the CME closed Bitcoin at 22,300. Okay, remember 23.3 was the level. We were $1,000 under that level. So weekly continuation to the downside is possible, but we're going to look at that in a second. And then on ETH, we closed at 1560. Okay, now you can see that our price action right now from the CME close is literally right there. We're just going sideways on that. So that's a good thing because there's no real arbitrage opportunity for CME Open right now. And this is another thing that I was talking about with one of our members, Candace. He was looking into uh, like CME gap theory. Like if there's a gap, are you going to fill it? Should we trade for it? And this and that, right? So back in the day, CME used to have a lot of gaps and, price efficiencies get filled. But that was back in the day. If you have not noticed already, volatility in the crypto market has been really, really tame. So the gaps that occur on CME don't always need to be filled because in a real world situation, gaps can be formed through institutions, meaning it's an institutional gap and go scenario where they have a gap and they're not planning on filling it. They just keep marking it up. And you trading to fill the gap is going to completely destroy your portfolio because the market um, irrationality can outlast your uh, solvency, as in you will lose money before the market uh, comes back to wherever you're expecting, because the market is always right. So that professional gap is showing you, hey, that gap is there, that's fine, but the price is supposed to be here. So there's no reason for that gap to come there because it's an institutional gap. Like some institution probably bought it over the weekend. When Monday, when traditional retail gets it, there's a gap. Well, that traditional person who bought it, they're going to probably defend that entry. They themselves created that gap by putting in their own money and causing that liquidity spread because of the fact that there was no orders in the. So there's no reason for them to let it come back to that level unless they themselves took profit and then took a short and then they created that pump like this. They created that pump just to get to their short level, just to take it right back from the original area. So the only people who got hurt here, all over here, was retail and retail. Because the real people bought on the 200, and then if they wanted to relong it, they could have relonged it here. And that's why they got punished. Because this was all BS. You know, the news and all that stuff doesn't matter. The head and shoulder formation that was supposed to be a fake out was a fake out, but then it turned into a distribution, and that's why this liquidity got tapped. We were looking for this level for a while. If you go back to the videos, just check. I've been telling you, we're gonna eventually come touch this. If it comes any lower than, I want to say, like 22.3, it was gonna come tap into this liquidity, and now we got this liquidity over here. So you can still go lower, $1,000 lower. Ironically, if we were at 23.3, now we're at 22.3. If we go down to 21.3 or 23, anyone over 10x leverage is gone. The market's purposely taking out over leverage traders, even though it wants to go up. Okay, this right here can be a bull flag, and this bull flag is probably going to get accumulated on support. You know, this like 21,800 or this 21,300, and then it will look for a upside. This 21,300 is the monthly low. So for it to come test that $1,000 drop, that's another 10x people leverage gone. You know, 10x leverage got liquidated here, liquidated here. We're about to get one more time, probably third leg down, and then you can look for that accumulation for upside. So these things you do need to, pay attention to. They are important. Let me go quickly to a daily. After that huge sell-off, a little bit of a buy-up is understandable, but that doesn't mean that it's full-on reversal. The risk was closing under the 200 EMA. We're really, really close to it. RSI-wise is showing you that huge bearish divergence. So here's your high, here's your other high, here's your high, here's your other high. You can see the bearish divergence just building and building and building. Finally, it just played out. Okay. So it was already in the cards. Forget the news and nonsense. It was already going to happen. Now that it's playing out, yeah, you got to the 200, but if you can't basically close above 23.3 again, everything else will be a dead cat bounce. So you can come all the way to 23.3 and then just roll back over, and then you will make this little head and shoulder, right? And then the measured move to the head and shoulder bottom is like 18.7, 18.6. So please do be aware of that. Yeah, we can go up, okay? But until we close above 23.3, why would I even plan on upside? And until well, we already lost at 21, so this was the area to short. I would not be shorting in this low of a level, but I would entertain a scalp long with a stop loss underneath this EMA of 21.3, 21.2, hoping that we are not doing that third leg down. I mean, I would not take a short here. I would look for my long and hope the trend is not broken. Maybe even have a stop loss like way under here, like 20,300 is where I would probably do it, or 20,200, just to stay safe from the wick from this level. If it wants to overshoot a little bit, it shouldn't go all the way 20,300, and it should reverse back. And then if it comes to this level, you'll just get chopped like up, down, up, down, up, down, sideways, and then up. I can draw it out, but Yeah, I don't want to do all that right now. Those are our levels that we're looking for. If you want to look at that, go rewind the video and pause it. Here, back to the 4 hour. Even if we get upside, I'm not looking for us to get too high. 22.7 and then maybe 23 even, or 22.9 to 22.7, because you've crossed the yellow EMA under the 200. Every bounce is going to have resistance. You're going to need 3 drives up before you look for actual reversal, in my opinion. So we'll wait and see how this plays out. Okay. Keep in mind that 22,300 is where CME closed. As long as it stays around here, we don't need to worry, because when Sunday opens, we can trade. But if there's no arbitrage opportunity with it going up or down, and if it's just going sideways within like $100 range around here, trading it is risky because you can get liquidated, because they can do a Darth Maul wick and get liquidity on both sides and then just continue sideways again. So right now, RSI wise, it does look like it wants to poke up a little, but around 22.7 to 22.9 is as far as I'm looking. Anything more than that is a gift, I would say. But I don't know why we would just jump up all of a sudden when there's so much negative news in the market. Keep in mind that March 14th is the Ethereum upgrade. The usually prices should be floating up to the news event to dump. If by any chance we are dumping into that Shanghai upgrade, I will probably be looking for my long. So either it's to sell the news event, or it's going to be a dump into the news event, and then I will be the person buying it alone, hoping for the pump, I guess. So keep that in mind. Now let's go to ETH. Bitcoin just looks like it's about to start off. And this does make sense that it's starting to look like it wants to poke up, because in about an hour, retail will be waking up, and their favorite thing is wake up and buy long. I do like how it is sitting on the 55 EMA, and then the 55 and the 21 EMAs above the 200, but I do want it to claim the 21 again. Otherwise, it's going to be all just chop consolidation and lower highs. Here we go to ETH. Sip of this coffee. Kitty. So as you can see, same thing is happening on Ethereum, that Bitcoin. If we would have just held this 21 EMA, I would have much more confidence of us tapping into that 1773 area. But it's still possible. It's just doing a zigzag consolidation, right? So we're just going to slowly make higher lows, and then we're going to break out. But it's trying to break out, okay? RSI is basically showing you where it is as it's going up, but that's also somewhat of a hidden bullish divergence, because if it was going to break down, it should have broke down by now. And the fact that you're holding this 200 EMA as a support, making this fake little mini inverse head and shoulder, gives people hope of upside too. So if we get upside action today, I'm not looking for more than 1610, 1620. I think around there we're going to find another leg to go back lower and maybe even test into 1460 area. I don't want to say that, but that is what we're looking at, around 1500 to 1460 area for the next test of support. Going on to the 4 hour time frame, we never took this liquidity like we did on Bitcoin. So this is a little bit stronger than Bitcoin. So, and then that makes sense because this is a news event that's coming in about 10 days, dude, 10 days away. So you guys should keep that in mind. If you're bullish on ETH and you're buying spot, you can survive any whatever happens. If you're on leverage, I know you want to hit a home run with this news event, but if you just use lower leverage and we do break out to 2000 and you're at 1570, I mean, that's $500. You're making 30% on a low leverage trade. Why are you upset? So I do think you can try to scalp along here and then have a stop loss right underneath 1450, and you have the opportunity of riding this to the next leg up. Or you can wait patiently for this level over here at 1600 and take a short over there, hoping a stop loss above 1650 or something like that. So that way, if it does try to poke up, you have an opportunity not to get stopped out. And then when it comes back down to equilibrium around 1650, you can take your profit. So that's like a $50 move on one end, and on another end, it's $50 short, because that short is going to be short-lived due to the fact that we're an uptrend market. When I said that 16 from 1700, if you or 1750, if you're taking that short to 1600 or 1650, you need to be quick about taking profit, because as soon as it taps that level, it can have a very quick reverse buy up. Because a lot of people right now are FOMOing and like literally buying every dip, thinking that, hey, this is going to be a bullish event. And then a lot of the news has perpetuated that it's not going to be a major sell-off event because of the fact of, you know, stakers in it for the long haul or blah, 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 whatever. I don't know about those theories. I just know human greed. I just know FOMO and human greed, and I'm trading that psychology, not, oh, happy dreams and promises of freaking happiness ever after. So reality says usually people take profit. When ETH gets unlocked in 10 days, all the people who originally are in ETH are going to be down like 50% of like their original bag. That's like $30,000 that they're losing. So, I mean, some people have a certain threshold of pain that they're not going to just add more money. And then certain people are just waiting to the safety of the upgrade before they jump in. So there's a lot of factors to consider. The chart says look for a little bit of upside, but more than likely we're going to get down. And all the retail that is trying to buy this for the news event might be, the ones that are going to pay the price to the downside. So just be aware of these factors. On a daily time frame, it does look like we're trying to find some support with these lower highs, but until we open next week and Dixie starts going down, and then we have an opportunity to go up in crypto and tech stocks, I don't want to say anything. And I am like still on the theory of this being a cup and handle. So this does look like a big breakout is coming to the upside. Like I'm looking at an inverse head and shoulder, like a W, 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 inverse head and shoulder, like this large inverse head and shoulder with the Quasimodo shoulder for upside. Like everything is saying like this is your buying opportunity. I know this is risky for a long, but this is your buying opportunity. The risk is it coming back to the like 1200 or 1300, and then the reward is you having the courage and the trading acumen to manage your risk at this level to basically take profit at the higher level. If I was trading a minute chart, this looks like it's going to break up, but I know that I have to be ready for a test of 1350, 1360, just because they're just jackasses like that. And then it's following this trend line. So if it's following this trend line and you get a quick dump down here to like 1300, I would use that as a big, 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 big buying opportunity for upside. So yeah, yeah. Between 1380 to 1350 too, man. You should look for a long lower here, and you should look for your short over here. This is an area of peace and tranquility. Plan your trade over here. Don't get chopped in this consolidation. This right here, consolidation wise, was just as long as this, as this, as this. This is murdering people on high leverage. You should not be dying. So please, please, please trade carefully. Keep in mind today at 1 o'clock Eastern, I will be going live with everyone. Uh, if you guys are interested, please feel free to join the Discord server. And yeah. Aside from that, please leave a like, subscribe, press the bell button for notifications. If you have any questions or concerns or have other assets you want me to cover, leave it in the comment section below and I'll get back to you. If you are interested in joining our Discord server, the link to the Discord server is in the description of this YouTube video below, alongside with all the other affiliate services that I use and recommend. And yeah, aside from that, guys, I hope you guys have a great day today. Please stay calm and chill. It's not nothing is happening today. All the fireworks is going to happen tomorrow. So let's make a plan today, get our rest, get fed, and then tomorrow we'll be ready to like beat people up. So let's get ready to take some people's lunch money because the opportunity is coming, and it's gonna be probably Sunday. Because I didn't even show you guys weekly, so shame on me. But here's the weekly on ETH, right? We were trying to make that new high over here. Well, we did get the liquidity. Now, the best thing I can say is on weekly, we are above the 200 EMA. We are so freaking close to making this golden cross. Please, please do not lose 1550. If you can just hold above 1600, even freaking better. Next week open, these will cross to the upside and we can get a nice giga green candle all the way to like 1850 to like 2200 on ETH because of the people getting into ETH for the upgrade. So there is that FOMO mentality you need to be ready for. Shorting this thing while it's in an uptrend, and this right here is wave one. This I've been saying is wave two. Wave three is gonna annihilate people. Wave four is gonna make people cry and die. Wave five is just gonna, I'm telling you, the if you know what FOMO is, you don't know what FOMO is. FOMO is wave five. Wave five, wave three is starting the gasoline on the fire. Wave five is dropping a freaking atomic nuke because wave five is complete, utter greed, exuberance, and idiocy. People buying the top and continually buying the top on high ass leverage, liquidating every freaking short. And then after that, you are going to have a blow off top scenario. I mean, I'm not even going to say 3650 is not in the plan, Like if I drew my fib right now, man, should I just do it just for shits and giggles for you guys? Okay. If I was to draw a fib and I gave you a target, I say, hey, what do I think is gonna happen or what I'm gonna do, blah 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 blah. I'd be looking at it like this. I'd be looking at it like this, and then I'd be looking for the target of this. This air, I could give two shits of this miter air. You guys don't know what miter air is. Some of you guys do. This is miter air. Okay? The only logical trade in this entire air level would be right here. That's it. That's as simple as I would be trading this. Why the heck would I trade anything else in this air other than a swing failure pattern of this high? And that's basically it. I mean, yeah, you can do this high too if you really, really want to over here at 2000, because that is a possibility. I should make this white. Let's make this a 10. Let's do one more here. Those are your swing failure patterns, possibilities. So either we're going to do it over here at about 2000-ish, 210, or we're going to do it all the way over here. All this other shit doesn't matter, okay? All these other levels don't matter other than the fibs. Sorry, these fibs do matter. I'm talking about this air. This miter air, all I care about is this level here. And then while we're in this little freaking sandwich packed consolidation, I'm looking for this 210 or $2,000 level break. And this is a psychological level, so it's like this is probably going to get buttered. When we do this breakout for wave 3, it's probably going to come to the top of this channel. And this is probably where I'm going to like look for my short. Right over here. Somewhere over there. So you can see this fib and this fib. I'm going to delete that thing. That thing was just stupid. But yeah, basically these things. And then from this level, when I short it from here, I'm going to take profit at this 2000 whatever, okay? And then I'm going to long it for that higher breakout because I'm pre-planning my trade right now. I'm telling you, if this thing breaks from wherever the heck this thing is right now, if it comes up, great. I expect resistance over here at like 2000, middle of the channel. Maybe you get one more pushback to like 1700. then I'm looking for a straight break. Okay, straight break to this level over here. Maybe we get a little bit of a smackdown. More than likely, the FOMO is just going to let you just freaking launch up. That's what I'm looking for. Okay, let's see what happens. I'm not that smart, so don't hold me accountable. I just gave you my entire plan for ETH. I hope that helps for you. Have a great day. See you later. Hopefully in the live. Come join me on the live. Don't be lazy. Don't be a bum. You don't got nothing going on Saturday. You want to make some money in trading? Let's make a plan together today. Tomorrow, act on it. This whole week is going to be that one trade that I'm going to be going over this weekend. Let's play. Have a great day.